Hello guys, welcome to the School of the Candlestick Patterns. Today we're going to be talking about the engulfing pattern and how to use them in your daily trading. So I hope you like it. See you there. So here we have both patterns, the bearish engulfing pattern and the bullish engulfing pattern. The rules of those two patterns are: the market have to be in a clear uptrend for a bearish engulfing pattern and downtrend for a bullish engulfing pattern. The bearish engulfing pattern is when you have an uptrend and the last candle get engulfed by a red candle that engulf the whole body of the previous candle. So this pattern have to have two candles, not as one before that we talked about in the previous part. So this pattern need two candles, and for the bearish engulfing candle we need a clear uptrend, and then at a good resistant level we have to get an bearish candle that engulf the whole body of the previous candle. Yeah, so we're talking about the real body of this bearish candle have to engulf the whole body of the previous candle. Okay, and for of course for the bullish engulfing pattern we have to do the opposite. So what we need is a clear downtrend followed by a candle that engulf the whole body of the previous candle. It's not necessarily to engulf the wicks too. In this case here we have this candle engulf both the candle and the wicks, and that's only good. But as you see in this bearish engulfing example here, the body of this candle did not engulf this wick. So the most important thing is the body of this candle engulf the body of the previous candle, as you see. And in this scenario here we have this candle engulf the whole body of the previous candle. And when you got a pattern like this, that don't mean that the market gonna reverse immediately, but that tells you and alert you that there is a possibility that the market may stop, go sideways, or reverse. So I will show you how it will look like in a chart also, as we have this example here. So what we're looking at is this bearish engulfing pattern at this area here, and why it is a good one, because as you see here we have this resistant area we've got rejected before here at this level, and we had this uptrend, and then we got this bearish engulfing candle at this level, and this candle came and confirmed this resistance we have at this level here. And when you have an engulfing pattern that confirms a good resistance or support level, those are the good ones. Many times when you have an engulfing pattern you have also some retracement to the upside, at least 38% Fibonacci retracement of this previous candle. So you can wait for some retracement before you enter, or you just open your trade at the close of the previous candles. You open the trade directly, of course, if the level is good, as we said. So this one here came and confirmed this support level, resistant level here, which make it a good reversal signal to take. And as you see, the following was to the downside. The market did break this support level and kept trading lower. So that's why in this scenario, in this case here, it works very well. But there is also many times that you don't find that this will go because possibly because it was on a not so good level. For the bullish engulfing pattern, it is almost the same thing, but you do the opposite. As you see here, this support level was long, very long to the left, so I couldn't show you the whole chart. The candles would be very small, but this candle came at a good support level after a downtrend again, and then we got this engulfing candle that confirms this support area. And as you see, the second candle kept going higher and we traded up until here. Then we got this engulfing pattern, which gave us some correction to the downside. And as you see, guys, one more time, the market came down, retested the neckline, and gave us another engulfing candle. This one here engulf the one before, or possibly those two candles. Let me show you that the body of this one engulfed both those candles and kept trading higher. So it's a very, very powerful pattern when it show up in a good place in the chart where you have strong resistance on support, and this pattern is one of my favorite. And I was thinking that I will show you how to use it, or that you can use it also at dynamic support and resistance as a trend line, and I will go to a live chart and show you that now. So guys, if we look at this pair, the Aussie Jappy, this is a daily chart, and we have the 200 moving average as that we're gonna use as dynamic support and try to find those engulfing pattern entries. And as you see here, guys, first of all, we have a downtrend, and that's a clear downtrend. So we are trading in a downtrend, and we are trading below the 200 moving average. I used to look at the daily 200 and the 200 moving average and use them also as dynamic support and resistance, and in this case it's gonna act as resistant. And as you see, when the market came to this level up here and did a retest of the daily 200 moving average, we start to get some rejection that tell us also, as we talked about in the previous part of this candlestick school. We got those pin bars that tell us that there is a possibility for reversal. And when we got this day here, we got our engulfing bearish engulfing candle that gave us a candle that engulfed all the last 3 days, as you see here, which is a very strong, where you get an engulfing candle that engulfs more than one candle before it. So that was our signal, and our entry would be at the opening of the next candle. And as you see, the market start trading to the downside from this level. We got another engulfing candle here when the market came up and did a retest of this broken support up here. Another engulfing candle here, and one more time here. And here also we have another engulfing candle that came also at the retest of the daily 200 moving average, and this one did actually, let's see, did engulf 1, 2, 3, 4, 5. This one did engulf 5 days. So another very strong engulfing candle that we got here, and the market kept heading down, as you see here. So yeah, there is lots of possibilities to use this pattern, but what most important is to use it in the right place of the chart. So try to find good support and resistance level, or trend lines, or daily moving average, as as I showed you here, and they will work very fine if you know when to trade them. Okay, so I hope you enjoyed this session, guys, and as usual, don't forget to click the like button if you enjoyed this this session, and feel free to share this video on social medias and let other traders get the benefit of it. So thank you very much, and see you in the next part. Bye bye.